Woof, this market is fun, ain't she? Today we're gonna have to give a pretty damn violent update, apologies in advance, on not just what's going on in the overall market, but also place. And then for the main entree this lovely evening, I want to talk about what the heck is going on with Ooga Booga HYMC, my predictions on this moving forward, as well as something big that's different this time around that you're gonna want to hear about. We'll also be discussing HYMC, which has just been a complete beast, and some math behind why it actually might deserve a lot of this run. Let Charlie drink some tea and then we'll get right into it. Okay, right now the overall market is in a very interesting retaining formation. The pace of growth has slowed, but it's still growing and retaining its massive rally from the last couple of weeks. Things are eerily still trading very, very solidly, especially in that lovely tech sector. The Nasdaq is continuing to outpace. If you even mentioned being bullish on tech 3 weeks ago, you got laughed out the building. Now it seems people just can't get enough of them. One of the major inflation drivers today had a bit of a massive cool-off today. Massive cool-off. Yep, that's a good way to describe it. Oil took an extensive dive today as Shanghai lockdowns have prompted more demand fears. It seems like major city after major city in China, each with tens of millions of people in them, are locking down. When you do that, what happens? Well, millions and millions of those people aren't going out and driving anymore, and the overall economy is not moving as fast, which means not as much demand on the oil supply chain. The healthy trading in the overall markets has allowed a lot of euphoria to pour back into some of the more speculative areas, some of the retail areas, and of course tech. Who had fun with DATS today? DatChat announced this morning they were making a decision to launch a Metaverse advertising and an NFT monetization platform. It launches in 28 days, and there's two big parts of this. You have the potential value they could provide in terms of offering the ability to actually advertise in the Metaverse, and the ability to actually monetize your NFTs. They sum this up nicely. As a landowner in the Metaverse, why not start earning revenue from your investments almost immediately? The Venvu dynamic content now allows you to easily get paid for ads, product placements, wearables, and much more in the virtual world you have created. So my thought process and why we briefed on it this morning was because number one, it had massive hype potential. And number two, it was spreading fast and showed some proof of concept in the pre-market. If something is reacting to a catalyst in the pre-market, just wait until you get full volume after market open. In this case, we did get that, and it ended up running pretty massively thanks to the overall risk on spec condition that we're in right now. Now, sometimes I get comments from folks that are concerned. They say, Charlie, why are you discussing that as a hype trade, a momentum trade? That's actually a long-term investment. That has a lot of long-term potential. Look, everybody has a different perspective. When it comes down to the Metaverse, though, in my opinion, I believe that 90 to 99% of Metaverse stocks and probably digital assets are going to be worthless by the time an actual big metaverse industry like people are imagining emerges. I just don't have the patience nor the pain tolerance for that. I don't like the odds. I think that it's rough. It's just too easy of an industry for people to expand into and then say, we're the new metaverse stock. But for a hype trade, you don't need any pain tolerance. You don't need any patience. You just need something that runs. What we look for in trades are clean momentum runs over our SMAs. We broke into an upward direction over our red directional SMA line here. By this point, we broke into solidly positive price strength over our blue price strength SMA here, and then it ran to 323. You're simply not going to know when you've hit a top though. So you use the discontinuation of our price strength, the break back below our blue price strength SMA as an exit plan target. No matter what you do with a short-term trade, you need to have a clear what? Entry and exit plan. Doesn't have to be confirmation above our price strength SMA line and validation below it again, but it does need to be something, and you need to have that in your mind before you take the damn position. Otherwise, you're just throwing darts on a board. Okay, moving over to Egypt. So Nile made another breakout this morning, going as high as 117 before cooling down to 94.95 cents-ish. It is still following that overall upward direction. Attention is still pretty hot, but I do think it got overshadowed by some of the other big runners today. Usually when you start getting a stock that gets overshadowed after being on the top of the list prior, all of a sudden you get into the situation where people can very, very quickly lose interest in it and the stock goes down rapidly. My thought process on this is that, hey, right now it's running on just attention. So if it does have to cool off to go back down before we get another catalyst run on the subsidiary spinoffs, fine. Trades are trades. You get in, you get out, you play the next momentum rally. Okay, next, an update on the MJ sector, the devil's lettuce. It got slapped pretty damn hard today, and Will Smith wasn't even involved. I know, shocking. The catalyst that we spoke about yesterday, the House Rules Committee that was supposed to meet today, is actually going to be pushed forward to Wednesday. As spec trades though, I highly recommend keeping an eye on them because momentum can pop back at any moment. Once this gets to the House floor, I would be shocked if you don't get some next wave of momentum. Of course, when you get back to the Senate, it's going to cool down again and it might be dead on arrival in the Senate. And they probably don't even have the votes that they need, but they have the votes that they need to get attention, and that's what's mattering. Okay, before we get to AMC and the rest of this video, let me go ahead and switch my shirt and talk to you about our sponsor for today. Are you looking for a trading app to trade stocks, options, ADRs, and ETFs on? Well, consider checking out Moomoo. One thing I'd like to highlight about Moomoo is they have an excellent screener that lets you scan for stocks based on not just technical indicators that we like, but also fundamental ones like revenue, profit, growth rates, liquidity, and even cash on hand. That can help you discover not just powerful short-term trades, but also long-term conviction trades based on the fundamentals. It also helps you calculate and essentially backtest the returns on popular patterns like the triple bottom, the bullish flag, the double top, the double bottom, and many more. And then it helps you find stocks that actually fit that criteria. They also make diving through earnings incredibly easy and getting the main points down with their earnings highlights. I clicked Rivian's and it says the key takeaway is that they are moving into large-scale deliveries, but that production still suffers from supply chain issues. And then I can go and see their stats on revenue and earnings per share and learn more and more about the company, as well as some breakdowns in recent Q&As. Anyways, if you are looking for a new trading app, I'd go ahead and give Moomoo a shot. And better yet, you'll get up to 5 free stocks plus 1 share of NEO valued anywhere between $300 and $3,500 each. I'll put the link below. Thank you, Moomoo, for sponsoring this video. Now back to the content. So, ooga booga AMC, isn't the market more fun when retail stocks start winning again? I think it's a lot more fun. Let me know in the comment section down below if you agree. Say ooga booga or something. AMC has now more than doubled in 2 weeks, 45% plus up today at highs, a little bit more in the after hours. It hit $30. Today's one-day AMC return outpaced the S&P 500's performance on a 5-day basis, a 1-month basis, a 3-month basis, a year-to-date basis, and a 1-year basis. Pretty jolly if you ask me. Interestingly enough, AMC almost doubled the returns of GME today, whereas last week it was the opposite, because GME had a very, very specific catalyst, the Cohen buy, that caused that to run up, and then AMC ran in sympathy. This week, it seems like AMC was the one with the catalysts, and it was playing catch-up in terms of a percentage gain return. Keep in mind, my prediction and overall analysis on the 23rd with AMC was that we would need to see it really break out in order for the market to really accept this as something that isn't just a fluke situation like we've seen with previous AMC reversal attempts. Sometimes you have to show the market a massive rally that is statistically significant for you to start realizing that, hey, wait a second, something's different this time. And to me, the breaking point was breaking past these December resistance levels that AMC failed to push above previously. And as of right now, you've not only broken past all of those resistance levels, but you've now hit the criteria where you're in the 30s. The last criteria that I would give for an overall bullish declaration that we're now on an overall uptrend is the actual ability to retain these $30 levels. If it can retain the 30s or at least the high 20s throughout the next week, even if it doesn't declare another penny of a new high, I would be shocked if you don't start seeing another massive FOMO rally and eventual gamma squeeze. Now it's at the point where markets are starting to realize, hey, wait, something's different here. You move over to GME, which I know folks have been wanting me to cover more. I haven't covered it too much in the past, but my thought process back on the 23rd was that we'd want to see it break and reclaim through those previous support levels, and I gotta say, we are kind of doing that very quickly. Both of these look like a very fascinating and fun setup. Now, the real test for these is how are they going to hold up when you get an inevitable risk-off day? I don't mean a huge risk-off crash, obviously that's another story, but if you get a noticeable risk-off day where everything is going down, where do they find retention? Are they finding it significantly higher than they did previously, or are they going and erasing most of their gains? I think they're retaining at higher levels, and if they're retaining at higher levels, that's also indicative of a declaration of an overall uptrend instead of just a dead cat bounce that goes back down. From a technical standpoint, one of the interesting differences between AMC and GME is how they've reacted to previous bottoms. AMC, prior to its massive rally, had declared a double bottom hither, whereas GME had been making lower and lower lows in the same exact time period. So why is this relevant? Well, it means that when push comes to shove and the overall market starts going into panic mode, it seems like AMC is closer to its floor than GME is. So why would AMC have a double bottom there? Well, my suspicion is that at these prices, near overall market lows, AMC was trading closer to its intrinsic fundamental value as compared to GME at that same time. Now, I'm not trying to say anything bad about GME. You don't have to explode on me in the comment sections because you like GME. I'm just saying that if you're looking at it from that standpoint and you see another massive risk-off environment, it's something to keep in mind. These stocks trade based on the overall same momentum. Each have their own small pros and cons and slight differences, but in terms of somebody who focuses a lot on AMC, I did find that that double bottom was very, very fascinating. Now, in terms of what's different this time about Ooga Booga AMC and why there's so much more excitement, it's because of this new rolling stream of potential catalysts. The New York Post reported today that CEO Adam Aron said the movie theater chain would embark on more, quote, transformational deals to capitalize on the interest of retail investors following its bet on a troubled gold and silver mining operator, HYMC. Now, obviously, AMC made the decision to buy a 22% stake in Hycroft Mining, HYMC, about 2 weeks ago, and it bought it at 107. It's now trading at 230-ish. If AMC keeps this track record up, they may want to focus less on the movies and more on the investing. They may actually be one of the best performing capital managers on the street, outperforming most hedge funds. That said, there are two dynamics of why this is running. HYMC, as we've talked about in the past, had a ton of resources. It just didn't have the liquidity to actually extract those resources. AMC, amongst others, had invested capital and allowed it to get that liquidity, or at least increase liquidity so it can really get started. And secondly, of course, AMC investing in this actually brought a ton of attention to HYMC, which then created an opportunity for massive, massive hype rallies and accelerated not just HYMC's capital position while they were doing a share offering, but also as a result, their overall ability to really extract those resources, which means that overall they could be earning a lot more revenue now. We'll talk more about HYMC and the math behind it a little bit later. But the last thing I want to say about AMC in this video is that you could say what you want about it. It's a movie theater stock, it's a retail meme stock, whatever. But there's actual real value when a company has the ability to raise tons and tons of capital, get tons and tons of investor attention, and use that attention to go invest in companies that are having crises. Especially when them doing that allows their followers to go and rally those stocks up after they bought them. It kind of reminds me of how ARK Invest publishes their trades. And back in late 2020 and early 2021, every time Cathie Wood and ARK Invest would buy something and publish it, people would go and rally it up like 20-30% afterwards. And it's like, even if she chose a bad stock, it didn't really matter because it went up so fast that she got an immediate return on her investment, right? Obviously, that hasn't worked so well for her as of late, but you see this in a lot of different spaces in the finance community. You see tons and tons of these big analyst firms, hedge funds, short sellers going and creating a piece on a specific stock, and it tends to benefit their position. AMC, with all the passion that it brings, is able to attract capital to almost anything that it buys, and the proof is in HYMC. So it's certainly a unique dynamic that not many companies that aren't specifically focused on trading stocks or investing have. At the end of the day, AMC is probably not going to be trading these stocks, they're just going to be buying and holding, but providing a ton of liquidity and a lot of shareholder interest to bring in new shareholders or new capital is a huge value add. In this case, help them raise a lot more capital in their share offering, right? So that creates real value for AMC, who just bought this. Okay, moving on, another day, another massive Hycroft mining rally, HYMC, up over 80% today. Will it keep running? Will it find a new breakout? Let me take out my magic 8 ball, and the magic 8 ball says, yes, Charlie. Well, really, it depends on the attention and whether you keep getting this risk appetite and FOMO buying. And given the current trajectory, I'd be surprised if it doesn't attempt another breakout in the next couple of weeks. Overall, pump and dump style trading like we see here in the past, but I do think that it's not done. The story here is not done. It's probably trading a little bit expensively if you're looking at it from a risk versus reward standpoint right now, but it's still not done. But one thing that you have to keep in mind as somebody who's covered this stock since before AMC even announced they had bought a stake in it is that the reason they were doing so bad before is that they did not have the capital resources, the liquidity to actually go and extract their gold and silver reserves. And Adam Aron summed this up perfectly. He said it has 15 million ounces of gold resources and 600 million ounces of silver resources. So let's do some mathy McMathy. The price of gold is $1,900.23 per ounce according to goldprice.com. Adam Aron says they have 15 million ounces of gold resources. You multiply the two, you get $28.845 billion in potential revenue opportunity if all of that is extracted in the gold side of the category. You go over to silver. Right now it's at $25 an ounce. $25 times 600 million ounces is $15 billion. You add the two together and you get $44 billion in potential opportunity for revenue. HYMC, based on Google's numbers, trades at a current market cap of $248 million. So here you have 44 billion-ish in potential revenue opportunity and a $200 and something million market cap. If HYMC can only mine half of that over the next 10 years, that's $22 billion of total potential revenue and $2.2 billion a year. If they can only mine a quarter of the full amount, fine, still huge. If gold and silver prices cut in half, fine, still huge. If they use this capital in any efficient way and Adam Aron's estimates are correct, then they should be able to get a massive jump in revenue from this. And now that they have the capital, that should be something that they're able to increasingly accomplish. So I mean, yes, HYMC is running on hype and FOMO and all this attention. You know it and I know it. But at the end of the day, I think retail momentum traders and spec traders overall, including a lot of the funds that like to play in these stocks that no one likes to admit or acknowledge, I think they'll keep finding compelling reasons to buy this up whenever it gets beat back down. And we're going to have a lot of opportunities for trading momentum. I think the story on HYMC is not done. I think the story on AMC's future acquisitions are not done either. And I think that we're entering a very fun spec period for a lot of different sectors in the market. And I'm looking forward to this journey. Anyways, folks, I hope you enjoyed this video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. If you're looking to learn how to trade with our step-by-step lessons, our private chat, our daily morning briefings, and of course, our full price target list, I'll go ahead and put a link to ZipTrader you below, as well as a coupon code Never Give Up, which will get you a nice discount before checkout. I also want to thank our sponsor, Moomoo. If you're looking for a trading app that is very powerful and has a lot of insane features that are going to be very useful for you and your trading journey, I'll put a link below. You'll get not just 5 free stocks, but also 1 share of NEO when you both sign up and deposit with our link in the description. Have a good one, folks, and I'll see you in the next one.